Let's understand what's happening with Mahindra Logistics, how their Q2 transpired, what's the way forward for the company. Let's touch base with the management for the same. Mr. Rampraveen Swaminathan, the CEO of Mahindra Logistics, is with us. Thank you so much, Mr. Swaminathan, for taking time out. It's been a strong quarter, especially in the supply chain segment. Could you give us an overview about the SCM sales as well as revenue?
So I think it's been a quarter of really recovery for us. Last quarter we restarted operations in a larger way, and we've really seen that acceleration on the supply chain side, where the business has come back to year-on-year growth. Our overall supply chain business was up 6%. Year-on-year, and obviously up significantly sequentially. The enterprise mobility business still remains challenged because it's highly impacted by the pandemic and work from home policies, and that business was down 70% year-on-year. Overall, we were down marginally by 2%, but revenue still was very robust. We saw growth in the farm sector, which is a very large part of our business, and we saw real acceleration in our non-M&M SCM businesses, especially e-commerce, consumer, and the freight forwarding businesses, all of which grew at very healthy rates. That obviously translated to an uptick in margin. We continue to have strong cost control through the quarter. And therefore, overall, I think we reported a strong improvement in earnings. I expect that to continue to accelerate, especially given that we continue to be very bullish about growth in e-commerce, consumer, and we expect to see a stronger auto recovery come the festive season.
Right, sir. And the non-SCM sales have also posted strong growth, and you were just talking about some of those verticals, but which ones were the major contributors?
So our non-M&M SCM business actually grew by 15% year-on-year. And really it's been the result of just our strategy kind of playing itself out. We've really been focusing on three things. First is diversifying our in-market portfolio. While we remain very strong on the auto side, really expanding to other parts of manufacturing, expanding in fulfillment logistics with e-commerce and consumer. So that's one thing which has been positive. The second one is our continued investment in kind of growing our solutions businesses, our value-added services and solutions businesses. So those are now up to 35% of our non-M&M SCM business, and grew obviously at a faster clip than the transportation service lines. So those two have really been very positive. We continue to expand our warehousing footprint. So this quarter we launched 800,000 square feet of long-term built-to-suit multi-user facilities in Chennai and Hyderabad, and we have further expansions coming up which are under construction in Pune and Mumbai. So those three things I think continue to kind of play themselves out. Obviously, post pandemic, I think we have seen the e-commerce business seeing a real growth with a significant shift as brands go more online, and that's in benefit the sector seeing, and obviously we are seeing growth coming from that as well. And we are seeing obviously consumer businesses come back to volume, and then starting to also look at saying how do they invest more in fulfilling demand, how do they expand distribution, and how do they really see how they can take their businesses more online. So those, I think, the broader sectoral tailwinds are also actually helping our growth play out.
Where are you seeing good pickup in businesses? Which are the segments or sectors that are really starting to turn around?
So for us, I think for one, e-commerce is clearly up, Upasana, I think, and that's probably going to be a secular story because, as brands go more digital and that space is seeing a fairly large expansion. We are seeing strong growth in the consumer business as well. I think customers, are focusing on, investing in solutions, looking at redesigning their supply chains, and we see some strong, momentum there as well. I think on the manufacturing side, there is strong month-on-month recovery. I think that should, except for some segments of capital goods, I think there is an improving recovery across most, segments within manufacturing. Auto is improving. Clearly, I think you see month-on-month improvement in auto. It's still trailing behind last year, but I think the momentum is really positive. I think October numbers just came in. They're extremely favorable, I think, for the industry as a whole. Should accelerate itself, with the festive season coming on. And lastly, we continue to see strength in the farm sector. So last quarter was a strong quarter. Q1 was strong for farm. Q2 continued that trend. So, with expectations of, a strong kharif and continued strength in the rural economy, I think, that's showing some really positive momentum, and we think it'll actually hold on, in the near term.
Right. And, so as we're seeing an addition of around 8 million square feet of warehouse space, what are the future growth prospects and where does the key focus lie on?
So I think we've laid out our growth strategy really based on four platforms. The first one is expanding our services portfolio. We've got a growing business in freight forwarding, which has continued to grow through the pandemic, and we are looking at growing that. We're obviously looking at growing our express business and a few other service lines. The second big catalyst for growth is going to be investing more in solutions. Post-COVID, we think there's actually a catalyst for this as customers look at deepening their supply chains, going more omni-channel, and actually building more resilience in their supply chains. So that's the second focus here. The third one is expanding our warehousing footprint and operational excellence. And that's something which we are continuing to do. We expect to continue to add both our bespoke warehouses, but also continue to expect a strong growth in our built-to-suit warehousing infrastructure. And lastly, of course, we're investing in digitization and innovation to create new value propositions for customers, especially on the fulfillment side. As we drive better integration across our service lines, we think we can actually create some stronger value propositions for our customers. So those are the four drivers which we are looking at driving growth. Obviously, in terms of market segments, we look to leverage our strong presence in auto, but really continue to drive faster growth from e-commerce, FMCG, durables, pharma, and discrete manufacturing markets.
We see an uptick in the enterprise mobility sales. Could you help us understand the demand momentum there?
So, as you know, in our mobility business, we only serve enterprise customers. So we provide them employee transportation and mobility on a shared mobility platform. And then we, of course, do on-call services and a few other services around it. We have largely been driven on IT and IT-enabled services and financial services market segments there. Broadly, I think the market for shared mobility obviously is very highly impacted by the overall pandemic. Most companies in this space continue to operate on a work-from-home model. And therefore, it is very challenging. Trip levels have shrunk substantially. This quarter, compared to the first quarter, we did see some improvement. I think our core enterprise mobility business, which is around the IT sector, did show some improvement. But we also started investing in doing new things. We launched a couple of new services that are on-call and subscription. We also started focusing on e-commerce and manufacturing facilities and expanded our bus service business, as opposed to using cars and sedans. So those things actually helped create some quarter-on-quarter or sequential growth. But on a year-on-year basis, it still remains a very challenging environment to us. And we expect that to continue for the next few quarters until a vaccine is developed and actually has line of sight to active deployment. We think we will probably not be able to see a return to normalcy. And we are factoring that scenario as we build out our strategy for that business.
All right. Thanks, Mr. Swaminathan. I think we leave it there for today.